So, as of this recording, the inflation data, the CPI Consumer Price Index just came out, which always shows us, okay, how the prices for consumers went up. Because according to the increase, we can actually estimate what is the inflation going to be. Now, the other part to that is that the inflation is a big puzzle part of what the Fed will do. And if the Fed sees increasing inflation, then they might increase the rates for the monetary policy quite earlier, which then not benefiting companies that having future revenue or having high multiples because of the growth, because growth is financed through cheap money. And this is actually what it's all about. And the question is, do we see a bubble burst, or do we see a recovery, or just a small correction? This is the questions, okay? First, let's dive into the inflation risk. So the inflation speeds up in April as consumer prices leap 4.2%, fastest since 2008. This sounds quite scary and might be just one version of the story, because think about it, the inflation of prices is due to many things, all right? First, it's the supply chain. Is the supply chain for products got a little bit harder and prices needed to be increased, like for example, due to the health crisis? Yes. The second part is, do these prices will stay that high, or it's just like a boom, a short-term boom? And the answer to that question is really what will happen when everything reopens, right? Because now specific industries go higher in prices, right? We have seen, timber goes up. We have seen oil prices go up. But what about the other things like travel? Or will also go up because there will be huge demand. But on other things, maybe the prices will go down, and the overall technology improvement, which, for example, Katie Wood is arguing at ARK Invest, she says, the overall technology will create a deflationary effect on economy. Where she is right, but how long does it take, right? I mean, how long does it take that the electric car prices will go down? How long will it take for Lemonade to bring the insurance prices down? And so on. This will take years, guys. And now we are speeding up against, a very fast coming inflation. So the argument of Katie Wood is a little bit not really good here, but I get her vision because she's a long-term investor, and that's why she has this long-term vision. Now, as you can see here, the consumer price index rise for April for a year earlier was the sharpest since September 2008. Now, economists surveyed by Dow Jones had been looking for an increase of 3.6. So here you can see the surprise. But in the end of the day, it's not a big surprise. So here is what I think can happen, okay? Now you're seeing the all the indexes as of this recording going down, okay? S&P 500 is down, Dow Jones. And then obviously the Nasdaq is down heavily with 1.42%. But if you're then looking into some of my, let's say, list of stocks, you can see here, for example, the treasury yield is going up as well, which is like an effect of the inflationary risk. Then you have companies like AMD, right? A great growth company, minus 2%, NEO down, Beyond Meat down, Space down, Tesla down. So all of this momentum and growth stocks are actually lower because of the inflationary risk that is again triggering the Fed to reduce the monetary policies, right? All with that said is that we might don't see the crash, because for a crash to happen, there must be a huge, and in this time, 2021, global thing that rolls over. We have seen the health crisis was a global thing that triggered the overall crisis on the stock market, on other areas of the industries and so on. But on the other side, think about the pricing of assets, okay? Let's say Tesla. Tesla is growing 50% per year. approximately over the last couple of years. Now we're seeing a correction due all of this economic data coming out, and the Fed might react earlier than expected, which brings the stock down maybe another 10-15%. But at some point, Tesla stock would be such a bargain that people would buy again. So I don't see for a very long time, to be very frank with you, a huge downturn or even a tech boom bubble burst or anything like that. Okay, so no crash. I think that we're seeing like a small correction. The market was very, very hot, you know, back in January, back in February. There's a lot of funds is also a little bit escaping the stock market. Instead, you know, is going to the crypto market, which is crazy. The crypto market on the other side is quite heavily crazy in my personal opinion, but that's another thing. You know, if you're seeing these companies rising up, definitely you need to agree with me that this is overvalued. If this kind of bubble bursts, if it's a bubble, you know, I let others decide because crypto is not my thing. But on the stock market, I can tell you that I don't see a huge, wide, worldwide impact on that yet. And the question will be, once we will see also that the inflationary effect is just temporary, this will obviously increase and accelerate the buying the dip. Okay, now we are having, okay, the stocks went down, should we buy the dip? Let's wait for some economic data. Sure, now the economic data comes out, they are not so great. Okay, what now the Fed says? What now the economic data in next month says? And so on. So it's not like a day-to-day basis. It takes weeks or months until, you know, the market is moving from up, which we had in January and February, to lower areas, which we are now, even to lower areas, maybe in a month or two, and then the stocks going back up, and maybe that's after the summer even. Okay, we don't know. That's why my personal investment strategy in these cases where everything seems flat is to look for diamonds in terms of which company can create huge buzz of what they have to release over the next couple of months. So obviously it's earnings for once, but on the other side we have seen also earnings. Palantir on earnings down 10%, you know, or 4%, and then the next day 10%, which was a great buying the dip opportunity. But companies like, for example, Space, even when the overall market goes down, and if they deliver on their promise of the test flight and so on and so forth, the stock will go up. Okay, people want to own the company because it's creating milestone after milestone. And this is exactly what I'm looking at. You could have Nike during the huge recession because people needed to have sneakers, right? Or sports clothing, maybe less, yes, but they grew the revenue during the 2008 recession. And what happened to the stock? Overall stock market went down and Nike stock went up. So it's about to pick the right company at the right time. That's all it is about. And sometimes you need to really look deeper and push all the economics to the side and say, okay, which company, depending on any market condition, would make great products that sell well, that increase the sales, have a great marketing, have a great leadership, and have a great product and a great industry. And this is what it's all about. So don't put too much weight on all of this economic data, treasury board. Yes, I mean, that's all important, but it's more important that you find the right companies, and I will help you with that, obviously, here on this channel. So make sure to subscribe and like this video. I see you obviously tomorrow, and thank you very much for watching.